If you believe that your financial history is going to prohibit you from qualifying for a traditional or conventional mortgage, let's talk about what your options are. I'm Jenny Aldretti with Lux Mortgage Team and the Realtor Hive. So first of all, what is a conventional mortgage? The easiest way to explain it, it's the general box that they try to fit most people in if you have good credit and a regular job. I just simplified it way down. But let's say that you have less than ideal financial history. Let's talk about if FHA loans can be an option for you and what are they and what are the requirements for 2025. So first of all, FHA stands for Federal Housing Administration. And typically the requirements for you to qualify for an FHA loan are a little bit looser. And they can be great for first-time homebuyers and people who might have a little bit of a financial history that's less than ideal. FHA loans allow you to buy a home with a minimum down payment, even if your credit score is as low as 500, but you can expect to pay mortgage insurance. Mortgage insurance is going to be an additional fee that you basically pay that is going to be built into your monthly payment. So what do you need in order to qualify for an FHA loan? So you need a credit score of at least 500, and if that's the case, you'll have to put 10% down to buy the home. If you have a credit score of 580 or above, then you only have to put 3.5% down. Now keep in mind that FHA sets the guidelines for credit scores, but if you have other factors in your file, like your employment history, that could increase the risk of how the lender sees your file going, they could change your down payment to help minimize what they feel the risk will be. So while your credit score may say that you only have to put 3.5% down, they may feel that overall your employment history or something about your file makes them feel like it's a little bit risky, so they may ask you to put down a little bit more than 3.5% down. Next thing they're going to consider other than your credit score is steady employment. You're going to need at least 2 years of consistent work history within the same industry. Well, what if you're a first-time home buyer and you recently graduated college? They will also consider you if you've been enrolled in school instead, or you've been in the military. Well, what happens if you don't have the down payment? There is another way to get the down payment, which is you can actually receive the down payment funds as a gift from somebody. There are some rules as to who can provide this gift, so make sure you check with your lender. There's also options for down payment assistance, and there's a lot of different programs for that. So just know that there's a ton of different options. Sometimes you have to put down the down payment. Sometimes you can get down payment assistance, which typically requires a higher credit score, sometimes 620 or above, or you can get the down payment as a gift. Just be prepared that if you get the down payment as a gift, there will be a gift letter required from the person providing the gift, and there are going to be some requirements associated with that. So it's not like the money can just show up in your account and you're like, oh, I got it as a gift. So make sure that you let the lender know that you will be receiving the funds as a gift and that you walk through that process together so that everything can be documented. In order to qualify, you cannot have any federal debt that is delinquent, which could include tax debt, especially any FHA loan debt against you that is delinquent. So now they've looked at your credit score, they've looked at your employment history. Next, they're going to look at your debt to income ratio. The debt to income ratio is simply the relationship between your debt and your income. They find this by dividing how much debt you have by your income. So let's say your monthly debt is $1,700 and your monthly income is $5,000. Would be a DTI or debt to income ratio of 34%. And when your credit score is 580 or higher, you can have a DTI as high as 50% and still qualify for an FHA loan. If one of the legs is a little bit unstable, you could probably make up for that fact with another stronger leg. And a little side note about down payments, if you are purchasing from a landlord, a family member, or a builder, it is possible that there could be a higher down payment required. So remember, these are all just standards set by FHA. Every lender has different rules based on your individual situation and file. Now, one term you're going to hear when you buy a home is PMI or private mortgage insurance. And typically when you put less than 20% down on a home, you're going to have to pay private mortgage insurance. Well, FHA loans do not have private mortgage insurance, but they do make you pay a monthly mortgage insurance premium. And there are two payments associated with this. The first is the upfront MIP, which is typically financed in the total loan amount. The second is the annual MIP, which is split up monthly and paid with the mortgage payment. So how much is MIP? It really can vary depending on your mortgage amount, how long you're going to have your loan for, how much money you ended up putting down for a down payment. They typically run between 0.15% and 0.75% of their base amount. So let's talk about property requirements for FHA. So the home must be your primary residence. It cannot be a vacation home or a secondary home. It cannot be an investment property unless it's a multi-unit dwelling and you occupy one of the units. Must pass an FHA appraisal unless you're doing a 203K renovation loan. The title must be in your name or in a living trust with you as the beneficiary. Beyond this, it must be a single family residence, such as a detached house, a townhouse, or a condominium. It is possible to purchase a multi-unit home up to 4 units with an FHA loan. But as I mentioned, you have to occupy one of the units. FHA requires that you occupy this property for at least 1 year as your primary residence, so you can't use an FHA loan to flip a house. You must have a social security number and be a valid resident of the United States. Citizenship is not explicitly discussed, so this implies that non-US citizens, including permanent residents, which could include green card holders, and certain non-permanent residents with legal residency status may be eligible. There are FHA loan limits, meaning the FHA limits how much money you can borrow whenever you're taking out an FHA loan. And this is dependent on the county in which you're purchasing in, and also on the type of property that you're purchasing. One example of an FHA loan limit was $498,257 for a single family home. However, in Alaska and Hawaii and other areas, they can go above $1 million. So it really depends on what area you're purchasing in. Not all FHA loans are the same. While some FHA loans are designed to help you purchase a house, others are to help you refinance, and even to help you renovate the home that you're purchasing to make it the way that you need it or want it. The most popular type of FHA loan is your 203B loan, which is just used to help someone buy a primary residence. And usually when people speak of an FHA loan, this is what they're talking about. But then people also have the option of an FHA energy efficient mortgage. In this case, home buyers take out just a little bit more than they need to purchase the home, and the remainder is used for energy efficient upgrades. And the exact amount depends on, of course, that particular home. Then you have the FHA HUD $100 down program, where you can put $100 down towards a home that is owned by HUD because it went through foreclosure. You have the HUD Good Neighbor Next Door program for law enforcement officers, teachers, firefighters, and EMTs, incentivizing them to purchase homes in revitalized areas for 50% off the list price. Then you have the FHA 203K loan, which helps buyers save money because they can purchase a fixer-upper and they can include the cost in the mortgage to help update the home. The updates have to be a minimum of $5,000, and the home has to be at least 1 year old. You have the FHA 203K Limited, which is similar to the other one, except they're a little bit more closer to being ready to move in. They just need a few cosmetic repairs. This allows you to replace your old mortgage with a new one and then take the excess equity out as cash. You can use this for home improvements, debt consolidation, and so much more. You have the FHA Streamline Refinance. This is for people that already have an FHA loan. It makes it go a lot faster, and they're just looking to lower their rate. And then, of course, we have our FHA down payment assistance programs. If you're struggling to come up with a down payment, they offer local and national down payment assistance. So how do you get started? First of all, you reach out to your lender, which is us. You're going to start an application, and then we're going to tell you what documents you are going to need, which usually are these. Go ahead and screenshot that. Then we tell you how much you're pre-approved for so you can get shopping for a home. Find the home of your dreams, get under contract, and then of course we have to do that FHA appraisal. And before we can close, we have to finalize all of the loan terms, make sure everything is just as it should be, and then you get to go to the closing table. Well, that was a lot, but I hope you feel a little bit more educated. Reach out to Lux Team. We're here to walk you through every step of the process.